It was another huge session for the market. The Dow was up 1.6%. The Nasdaq and S&P both rallied 1.2%, and crude oil finished at $64 a barrel. So what's the message of the market today? Well, I always talk about market breadth. It was strong, as you, of course, would expect in a session that saw the Dow up 400 points. You had 1,997 winning stocks in the New York Stock Exchange versus less than 1,000 losing stocks. 2.4 billion volume to the upside versus only 460 million to the downside. Stocks hitting new highs beginning to spike. It was 94 against 26 stocks hitting new lows. Technology led the pack again, this time dominated by HP Inc., which continues to rebound after that strong earnings report last week. Semiconductor names also continue to rock and roll. And of course, don't look now, but Apple is back. Then there's healthcare. It was paced by medical device makers, Medtronic and Stryker, both having pretty good sessions. And then, of course, I keep talking about consumer discretionary names. I love them. I've talked about Netflix over and over again. Had a huge session. But brick and mortar also quietly coming on. You know, Macy's up 45% from its November low. And then their financials, they were strong, powered by Berkshire Hathaway, which posted its financial position. This is Warren Buffett releases annual shareholder letter over the weekend. And I got to tell you, it was much better reading than the Democratic memo. I call it Warren Buffett's Margaritaville. Now, I got to be honest, I'm not a big fan of him when it comes to politics, but I love this overall message in his shareholder letter. It's a must-read for anyone in the stock market. There was a key statement, in fact, in there that you need to know and you need to keep in mind as an investor. And it goes like this. Charlie and I view the marketable common stocks that Berkshire Hathaway owns as interests in businesses, not as ticker symbols to be bought or sold based on their chart patterns and target prices of analysts or the opinions of media pundits. Instead, we simply believe that if the businesses of the investees are successful, as we believe most will be, our investments will be successful as well. Now, I'll tell you, there's some value in charts. I use them, but it's nuts if you're a long-term investor to only rely on chart patterns and formations rather than economic data. Company-specific fundamentals is what you want to look at. It takes a fair amount of time, I'll admit, and a lot of elbow grease to find these winners and stay ahead of the game, but it actually took you a lot more time to accumulate those investing funds to begin with. So what about the smartest guys in the room? This part I loved in the letter. In 2007, Warren Buffett made a 10-year bet that he could do a lot better skipping those big-time hedge funds and their extraordinarily high fees, 20% on profits, 2% administrative fees, and just invest in the market, the S&P 500. Well, as it turns out, he was right. Over that period, the S&P 500 climbed 126%, while the best fund was up about 88%, the worst, 3%. So the smartest guys in a room, the pharaohs of Wall Street, they didn't really do that well. Now, it doesn't matter, of course, because these hedge funds are still taking in a ton of money this year, more than $14 billion in January alone. And that despite headlines like the one I saw in Financial Times today. Quantitative hedge funds take February beating. Of course, the industry will say that they're not supposed to beat the market, hence the word hedge. But to me, it seems like a cop-out. But of course, you know, people can do what they want, particularly if they have millions of dollars. But for you out there doing it yourself, right, people who aren't trying to protect wealth or underperform the market, well, I strongly suggest that you continue to do that. Do it yourself. Get some professional help, though. But certainly know where your money is at all times. Be cognizant of it. I continue to stress the need to be an investor. And I love the idea of an ownership society where you forge your own destiny or at least improve that of your children and your grandchildren by investing in the stock market.